Hi, I'm Scott Schubert. You know, trading financial markets is a little bit of a science and it's a little bit of an art, but it's mainly a business of stacking probabilities. If you can learn to recognize a high probability reason to enter a trade, so that when you enter a trade, you're winning a high percentage of the time, and if you just have some basic risk management so that your winning trades tend to be bigger than your losses, then you're going to see an increase in capital. In financial markets, there is one primary high probability reason to enter a trade, and that's because the end of a correction to a trend is forming. Over the years, many different people have been looking at the market and seeing different things, and in the 1930s, a man named Gartley noticed that a certain pattern always seemed to lead to a good opportunity for trading. And that pattern actually is an ABC correction to a trend. So what he was actually using was Elliott wave, although he may not have realized it or emphasized it. The Gartley pattern is always a correction to a trend. This is a bearish Gartley pattern right here, and over here there is a perfect uptrend and then followed by a correction, and if the correction conforms to certain Fibonacci ratios, then it's identified as a harmonic pattern. Here's the interesting thing. Over the last several years, I've been carefully studying all of the harmonic patterns that come up in the Forex market on all time frames for all different currency pairs. And what I found is that in our trading community, we have identified these points as entries for a trade every time without using the harmonic pattern, because it's always an identifiable end of a correction to a trend. If you know how to employ our system to identify the end of a trend and identify the end of a correction, then you're going to get into these trades every time, whether or not you have this plug-in on your charts that's identifying this as a harmonic pattern. However, I still love to use this harmonic plugin for MetaTrader because it identifies these patterns for you and shows you automatically that these are the patterns that stand out as having the high probability Fibonacci ratios, known as one of the cataloged harmonic patterns. Here's the Canadian yen daily, which is very interesting that I often look at the Canadian yen not to trade it, but I look at it because it often has very clear patterns, and their patterns seem to conform to the harmonic ratios as well. I use it as a guide to help me to enter trades on other yen pairs and other correlated pairs. And right here you have another bearish Gartley pattern, and again this is a trend over here, and this is an ABC correction that happens to go to 61%, and every time there's a correction to a trend that it may or may not end up at 61 or 78% Fibonacci ratio, but yet we'll still be able to identify it with or without this harmonic tool on there. On the very same pair, on a shorter time frame, on the 30-minute time frame, another harmonic pattern, this time a bearish bat, appeared on here. Interestingly, we didn't get into that trade because we could see that on that pair, when we remove the harmonic tool, we could see that this was actually the end of a downtrend, and so that was not an ABC, and that wasn't the end of an ABC, and it would be a valid bearish Gartley or a bearish bat if it was an ABC correction following a downtrend. And this is why I've tried to explain to many harmonic trading enthusiasts that what we're doing here is actually far beyond simply using the harmonic patterns in the way that they have been studied and cataloged. Here's a pattern on the pound Aussie on the 1 hour time frame. We're able to identify this is a trend over here, that this is a correction, and we're able to identify that this was the end of a correction and an entry for a trade. And as you can see, the market shot up from that point, but what's interesting is that we were able to identify that it was also an entry at that very same point on the Euro Aussie, which didn't have a harmonic pattern in there. You see, the Euro Aussie didn't have a pattern that conformed to the Fibonacci ratios of a harmonic pattern, but it still had the end of a correction. And sometimes the pairs that don't have the harmonic patterns produce trades that are just as good or maybe better The pound kiwi, which is an extraordinarily powerful pair and is closely correlated with the pound Aussie, produced a harmonic pattern at the same point, and this was also identified in our webinars without using the harmonic pattern as an end of a correction and an entry for a trade the very moment that that formed. Often the harmonic pattern plugin for MetaTrader and the harmonic traders will identify points as a harmonic pattern that aren't the end of a correction to a trend. And those are usually the patterns that turn out to be failed patterns, and yet the harmonic trading experts, from what I can see, they don't even realize that, and they're not even aware of it at all. And what is typical, I've noticed, is that they tend to also not know how to identify the point that is the end of the correction and the beginning of the trend to enter the trade. They don't have an actual entry method that is clear for how to get into the trade, and then after getting into the trade they also don't seem to know how to identify the end of the trend. They're not even thinking about whether there's a trend or how to identify the end of a trend after entering the trade, and yet in our community at the end of a correction they will enter a trade and then remain in the trade for the maximum amount of profit and exit at the end of the trend. Traders have all kinds of random, arbitrary take-profit strategies to take profit at a certain target 1 and target 2, but very few people in the entire world seem to know how to exit at the end of the trend. This pattern was identified as a bearish butterfly pattern, and yet it's not following a downtrend. It doesn't occur at the end of a downtrend. And when it does actually turn right at that point, that's nice, but it's not going down in a downtrend. It's going sideways in a correction to an uptrend. So for this to really be a valid bearish butterfly, it would need to be measuring an ABC correction in a downtrend, and that is one of the missing keys that the harmonic traders throughout the world don't seem to get. So once more and more people discover this, then they will be turning more towards our view of how to trade, and especially you will see many more people around the world developing more and more enthusiasm for the work that we have done to perfect the art of identifying the end of a trend and the end of a correction in order to enter a trade at the end of a correction and the beginning of a trend, and exit a trade at the end of a trend. It's funny how many people, because of their conditioning of their minds, resist this idea and don't want to, for instance, enter a trade here at the end of a correction and exit a trade here at the end of a trend. Don't want to do that. Please don't make me do that, they say. They'll want to do all kinds of other things. But eventually, the ones who are very persistent and determined to make the trading business work tend to find their way to the knowledge and experience that we have developed in our trading community.